Wall Street is flirting with new records, but the dollar is down at an almost 4-year low. This is Macro Matters, and we're talking about the possible end of dollar dominance. Central bankers meet next week in Portugal with a big question hanging over their heads. Is the monetary system centred on the US dollar starting to unravel? The dollar is down 10% so far this year as investors look for alternatives. Jeff Schulze is head of economic and market strategy at ClearBridge Investments. Jeff, what do you make of the dollar's weakness over the last 6 months?
Well, coming into the year, everybody was positioned on one side, which was long the U.S. dollar. After a couple of years of U.S. exceptionalism from an economic and market perspective, so part of the move lower in the dollar was just an unwind from overpositioning. But then, of course, you had the tariff escalation, which created some more flows out of U.S. assets and created more pressure on the dollar. I think at this point, though, everybody is short the dollar. It's hard to find a dollar bull out there, so you could see some dollar strength as we move through the next couple of months. But ultimately, when the Fed eventually does get to the rate cutting cycle, and I think they will, it might be in the fourth quarter, but they will, I think that's going to pressure the dollar, coupled with some better global strength after all the rate cuts that we've seen from global central banks over the course of the last 6 months. So I think we could see some near-term dollar strength, but I see some long-term dollar weakness continuing.
We'll get to the Fed in just a moment, but do you think currency markets are showing underlying investor worries about the health of the US economy?
I don't think so. I do just think it is a shift after a 15-year period of a dollar bull market overall. And you're starting to see some better growth prospects potentially from international markets coming into the year. International markets were historically cheap compared to the US, and you've seen that gap close, but it's still a pretty wide gap, all things considered. You're starting to see the use of fiscal stimulus to a greater degree in Germany and Europe. I think you may get a larger fiscal package out of China that is really directed to the Chinese consumer, which is going to have a knock-on effect to Europe, to emerging markets, to Japan. And I do think that, again, given what global central banks have already done over the last 12 months, that is really going to support better economic momentum as we look forward. So I don't see a smoking gun here that the dollar's dominance is over, but I really do see a much more balanced picture in U.S. versus international performance as we look forward, certainly more balanced than what we've seen over the last 5 to 10 years.
As you mentioned, investors are now moving to price in a more dovish Fed. Of course, that's partly because President Trump continues to rail against Chair Powell and might nominate a replacement well before the end of Powell's term next May. Are markets nervous about the Fed's independence?
Well, I do think that is one thing that was weighing on the dollar over the last couple of days. But ultimately, even if Trump does announce Powell's successor in, say, September or October, that's right around the time that you usually see the announcement of a new Fed chair. So it's not that early compared to what we've historically seen. But ultimately, I do think that we are going to see the Fed cut. But I think it's really a 2 or 3 cut or no cut situation. If the economy does falter more than my expectation, you're probably going to get multiple cuts, maybe more than what the set projections have. But my view is that we're probably going to get no cuts this year. And if we do, it's probably going to be at the end of the year at the December FOMC meeting. But there's been some chatter about a July rate cut. Powell threw a lot of cold water on that in his testimony yesterday. So I think the Fed is going to be on hold to see what the full effect of inflation is going to be on prices in the U.S.
And of course, unpredictable high tariffs could be back within the next couple of months. What effect might that have on the dollar?
Well, before this recent spat of trade wars, one would have thought that it would have strengthened the dollar like you saw in the first Trump administration, but it has been the exact opposite this time around. So given recent trading dynamics that we've seen over the last couple of months, I would imagine if we do see the one-way street of tariffs move in the other direction, which is higher tariffs, more friction than what we've seen over since mid-April, I could see that being a situation which creates more of a rotation out of the dollar and into other major currencies. So, I think we are going to see some more trade volatility than what we've witnessed over the last couple of months, which again is going to have some implications in the currency market.
That was Jeff Schulze of ClearBridge Investments. Don't forget, you can watch more videos on Reuters.com.